Let's talk about a force that's already moving through the stock market, trading faster than any human could ever dream of. It's a force making some people a ton of money while costing others a fortune. We are, of course, talking about artificial intelligence.
So this is the big question, isn't it? Is this incredible technology your secret weapon in the market, or is it actually the biggest hidden risk you're facing? By the end of this, you're going to have a much clearer idea, so let's get into it.
Okay, first things first. What is AI even doing? It's not some magic 8-ball predicting the future. Its job is actually super specific, and, understanding that is really the first step to using it the right way.
So in the real world, how is AI being used? Well, a big one is high-frequency trading. We're talking about making trades in tiny fractions of a second to profit off of microscopic price changes. It's also an absolute beast at pattern recognition, sifting through these giant mountains of data. Price, volume, even market sentiment, stuff a human team could never get through. And it doesn't stop there. It's scanning news articles, social media, trying to figure out how investors are feeling, and even trying to get a jump on predicting corporate earnings.
And this right here is the key. An AI algorithm has zero emotion. It doesn't panic when the market drops. It doesn't get greedy when things are flying high. It just looks at pure, cold, hard data. And, on the surface, that sounds like the perfect trading partner, right?
So let's put ourselves in the shoes of a short-term trader for a minute. For them, AI looks like an almost unbeatable advantage, and here's exactly why.
The advantages are just huge. We're talking near instant trades, decisions made completely free of emotion. You can backtest an entire strategy that's basically running a simulation on past data in a few seconds instead of a few months. Plus, AI can spot these tiny little trends and arbitrage opportunities that are literally invisible to the human eye. And all of this actually helps make the market run a little smoother for everybody.
So it's faster, it's smarter, it sees things we can't. It sounds like the perfect money-making machine, doesn't it? But here comes the twist, the one that most people just don't see coming.
This is where the whole story flips. Because think about it, when everyone has a superpower, nobody really does. This AI arms race has created a whole new world of hidden dangers that can absolutely blindside you.
See, here's the problem. Your brilliant AI is out there fighting thousands of other brilliant AIs. So any edge you find, poof, it's gone in minutes. And when all these computers spot the same signal, you get what are called crowded trades. Everybody piles in, which means the whole thing can flip on a dime. That can lead to flash crashes, where the algorithms just start triggering each other's sell orders in a massive chain reaction. And maybe the biggest trap of all, by the time a regular person gets an AI signal, the big Wall Street firms, they're probably already selling.
And this is just the stone-cold truth of the AI game. Those hot strategies you see getting passed around online, they're usually already old news. Wall Street's way more powerful systems have already found the pattern, squeezed all the profit out of it, and moved on to the next thing before most of us even knew the trade existed.
So let's be really clear about this. It's not the AI that's losing the money. The algorithm is just doing what it was told to do. The problem is people jumping into this brand new battlefield with a very powerful weapon they don't fully understand.
Okay, so let's completely switch gears. What if you're not trying to be a high-speed trader? What if you're a long-term investor? Well, here the story is totally different. AI isn't your competition, it's more like a powerful assistant working for you.
Yeah, for long-term folks, AI is humming away in the background, just making good strategies even better. It helps those low-cost index funds track their benchmarks with incredible precision, which saves you money. It offers really sophisticated risk management, looking at thousands of factors to keep your portfolio safe. It can automate rebalancing to keep you on track with your goals, and it's even helping regulators get way better at spotting fraud.
So the main point for investors is pretty simple. AI is not here to replace the tried and true principles of long-term diversified investing. Nope. It's here to basically supercharge them, making those boring but effective strategies even more solid.
All right, so we've seen these two completely different sides of the AI coin, right? The crazy, high-risk, high-speed trading world and the calm, supportive role it plays for investors. So how do we put this all together into one smart takeaway?
When it comes right down to it, AI isn't good or bad. It's just a tool. It's like a hammer. You can use it to build an amazing house, or you can smash your thumb. The power is undeniable, but using that power without really understanding the risks, that's just a recipe for disaster.
So what does a smart approach actually look like? Well, for traders, it means using AI as an analytical tool, a co-pilot, not some magic signal that you follow without thinking. For long-term investors, it means sticking with what works, low-cost index funds, which are now even better thanks to AI. And for absolutely everyone, the golden rule never changes. Understand the risk before you start chasing the reward.
So just remember this, in a market where machines are making moves in microseconds, your biggest advantage might not be having the fastest computer. The real edge, the thing that truly separates the winners from the losers, is the human wisdom to know when the absolute best trade is no trade at all.